Hi, I'm Mike Cintolo, Chief Analyst of Cabot Growth Investor and Cabot Top 10 Trader, and I'm here with your Cabot Weekly Review. I'm recording this late Friday morning, as usual, January 20th. So yeah, the major indexes, as I record this, down a couple percent on the week. Not great, but not totally unsurprising. We saw a lot of indexes hit or come close to or just above their early December highs, recent highs. And of course, there's been a lot of selling on strength, selling near resistance in the market. So it's kind of par for the course in that sense. Not ideal, but at the same time, I'm not really seeing anything different from a week ago. The broad market has remained relatively resilient, pretty tame numbers of new lows. The 2-to-1 blast off indicator still in effect, nothing really out of the ordinary to this point. Usually it will see a little bit of a pullback after the signal. And a lot of the selling in individual stocks were names that had just stretched higher and now are pulling back some. I'm not saying that's good, but I didn't see a lot of stocks, just ripping below their 50-day moving averages, or if you're a weak stock, I didn't see it plunging below their December lows. There might have been a few out there, but nothing that really caused me to cross a lot of names off some broad watch list I had. So overall, we're still cautious. I mean, the evidence is still weighted toward the negative side. Long-term trend is down. Intermediate-term trend still, I think, sideways. We're kind of range-bound in here, and not a lot of things are running away on the upside, of course. So we still want to see buyers show up. That said, I do think that we're seeing some legitimate signs that the selling pressures are easing, and if not as many, but a few signs that the buyers are starting to step up. Okay, I think if the market can hold in here in this area and accelerate higher, whether it's right away or in earnings season, I think there's going to be some pretty good opportunities there, especially if we start seeing earnings gaps and that sort of thing. Right now, still cautious, still going slow, still doing small positions, but definitely have your list ready because I think we've certainly seen a new year changing character in the market. And if it continues, obviously it's a big if, but if it continues, there should be some good opportunities, okay? All right, let's hop into the charts. I am starting here with stockcharts.com just to show you a couple of sort of top-down broad market things and how they really haven't changed at all this week, okay? So this chart right here, the top line is the percent of New York Stock Exchange stocks above their 200-day moving average, okay? And it goes back to basically the middle of last year. So you can see in June, July, very low, 15%, got right back down to that level in September. But then you can just see it's hit higher highs and higher lows since then. Can that change? Yes, of course, it can always change, but you want to go with what you see. And to this point, this pull back the last couple days, a little sloppy, some stocks coming in. But you can see on a kind of a breadth basis, not that big of a difference here in terms of the market. We're still at much higher levels than we have been really in about a year and a half, probably since, late 2021 in terms of how many stocks are above the 200-day lines. Not the be-all, end-all indicator, but just a sign that the broad market is still pretty resilient. And of course, the other sign here, this is our 2-second indicator, the new lows. They expanded a little bit yesterday, Thursday, but only to 18. So you can just see that going back months, I think it's been 11 or 12 days in a row of sub 40 readings. A few of those have been single digits, still pretty tame. At the last time I checked, it was 11 or 12 this morning. We'll see how it goes. They can always expand, things can always change, but so far it certainly looks like the selling pressures aren't super broad and crushing the market, even though the Dow was down 600 points. Which I'll get to in a second. But it just seems like it's some steam coming out of the things that had run, nothing really breaking down. So far, so normal on the pullback, okay? Now let's switch gears here. Let's hop into MarketSmith right here. Okay, and this is a product, MarketSmith. You can learn more at marketsmith.com. It's a product of Investors Business Daily. Just to kind of, go through, we saw the NASDAQ is still the weakest major index, but everything pretty much approached this, I'm going to call this sort of the Thanksgiving to early December resistance area, if you want to call that, and then backed off. Now, again, it's been an ugly reversal and it didn't feel good, but when you look at the chart, nothing's really changed. It's just kind of sitting around here near some moving averages, that sort of thing, and, backed off. So to me, just cleaning up the chart, even with the NASDAQ, like I said, which is the weakest major index, it's still basically just kind of range bound in here for better or worse. So I would say the intermediate term trend is still pretty much neutral. You can see it a little bit better here. S&P 500, same sort of thing, approached it, backed off. But it's not like to this point it's, back down here. You get back down here, sure, that would be a little bit more than a little bit iffy in terms of the short to intermediate term. But IWM, MDY, same thing, approached resistance, didn't work, par for the course in this environment. But we'll see how it goes. Do we have a 2-day shakeout and that's it? Or does it follow through? But basically, look at all of them. They're all pretty much still in this range. I would say the shorter and obviously more contained this pullback is, the better. But so far, I'm not trying to say the pullback's been great, but, it's been normal, and I haven't seen the bottom drop out of the market or a ton of things break down. So, hey, we had a good run. We pulled back for 2 days. We shook the tree. Now the question is it a shakeout or can we build on it? I will say, like I said in the intro, I do think if we can steady here and come in next week or maybe even the week after, maybe we hang out for a week and really accelerate higher and some stocks break out and you get some earnings gaps, that would be pretty, I'd be a little excited. It would be a little juicy there, okay? One thing that's very interesting on this pullback too that I hesitate to call it encouraging because it's down action, but I like the character of it. Here's your Dow Industrials. Now, this was your October low. And you can just see a very persistent, strong advance, outperforming the market. You can see relative to the S&P 500, this blue line. And it was the same thing, of course, and I pointed this out every video. This is the XLP, the ultimate defensive stock index, in my opinion, consumer staples, toilet paper and toothpaste and all that. And you can just see it was outperforming and leading the way higher while not just the NASDAQ, but even small caps, mid caps were just kind of like, Now we're sitting out, let me go back to the Dow. Now on this pullback, all of a sudden, boom, the Dow here is below, it's back down near its December lows. It's below the 50-day line. And if you just compare that to, let's look at the spiders like we just looked at, this is kind of right at the 50-day line and well above this December low. This is all shorter term stuff, but it does seem like on this latest mini leg, I guess I want to call it, of this rally, the last 2 or 3 weeks, you're certainly seeing more outperformance from not the Dow and especially not the XLP, which has pretty much led the decline this week. Coming into today, the XLP was down 3.5%, as were the utilities, XLU. You can see really breaking down. Again, I hesitate to say like down is good, but I do think that if we can get some relative strength in, obviously the NASDAQ would be best, but whether it's the broad market, the NASDAQ, whatever, and we get some of these defensive areas to kind of, fall by the wayside a little bit, I think it would be a minor good thing. Compare the Dow, just to pull that up one more time, below the 50-day line getting hit. And then you kind of look at, this is the semiconductors, okay? Yes, it backed off from this resistance area, but above its moving averages, not by a lot, but above its moving averages, and of course, well above its December low. You look at the IWO, which is Russell 2000 growth, small cap growth. Again, rejected near this resistance level, but above its moving averages, well above its December low. So you're kind of, it's early and it can change. Something gets bombed on earnings or the NASDAQ, gets crushed or the Fed says something. But, you're just looking for breadcrumbs and step by step. That's really one of the things I took from this week was down, not great, but it's interesting that the down was led by the defensive stuff. And it wasn't like, all the stuff that had worked fell 15% on earnings or something like that, okay? Specifically, I'm going to start this week actually with cyclical stocks because a lot of them look pretty good. Now, this is United Airlines. They came out and said they're going to make like $10 a share or something this year. That doesn't mean the market has to, respect it. But overall, this looks like kind of if you're a cup with handle person sort of thing, huge volume breakout. Yes, it's reversing this week, but we'll see how it goes. This is one of these examples where the stock went from 37 to 52, call it. And now yes, that's a big shakeout, but looks fine to me. Maybe it fails, but I certainly don't think that action is quote unquote bad. This is American Airlines, AAL, same sort of thing. I think they have earnings. Did they have earnings today? I forget, but maybe next week. Anyway, bottom area, big breakout, reversal. Airlines to me still look pretty good. Jabil Circuit, JBL, this was in top 10 this week. You can just see big long, it's not your fastest mover, but big long constructive base, breakout, tight pullback, and then big volume up last week and holding all those gains this week despite the market, really no desire to pull back yet. Same thing with Hyatt, the hotel company. I might have mentioned this last week. Same sort of thing. I think there's a lot of travel stocks that look good. Again, it's not a cloud software stock that's going to double overnight or whatever, but good volume on the sort of breakout attempt and actually higher this week despite the market's shenanigans. And then you kind of get, when you have had pullbacks, like I showed you the airlines, this is Boeing. You know, I'm not going to go there, but, big earnings turnaround. The stock, historically, I will say Boeing for a mega cap stock does have the ability to trend because these aerospace things, when they move and there's no pandemics, they tend to trend for a while. But you can see a nice, double bottom action. I think I've mentioned this before. It did get a little bit, hot and heavy here to start the year. You can see this sort of straight up action. But, so far this pullback, normal. Could easily pull back further, maybe to some of these moving averages, but doesn't look out of place. Freeport, McMoran, FCX, same sort of thing. It's been kind of like stair-stepping higher, tightened up. Nice volume cluster here to start the year. Again, a little bit of ugly action, big reversal if you went chasing. Not that you got killed, but, oops, I'm down, whatever, 5% or something right away. But holding in there quite fine. Could easily digest a little bit more. Maybe we come in next week and it nosedives, but so far so good. I mean, it certainly has the opportunity to pull back, and a lot of these have not done it. Toll Brothers, some home builders look a little that have been trending better, look a little bit more ragged than others. Toll hasn't been the strongest name in the group. Obviously it's a higher end home builder. But clearly, trending higher, so to speak, outperforming the market. And again, on this pullback here, totally barely a pullback at all so far this week. So maybe it pulls in a little further. Coal stocks, I keep mentioning these. I think these are decent setups. This is Arch Coal or Arch Resources. The risk here with a lot of these is they've gone up a billion% or whatever it is, or they did for a year or so. But it has kind of had an opportunity to digest. And this sort of latest consolidation in here is a lot tighter and more proper, in my opinion, lower volume than, just, oops, there we go. And then this big down and back up and big down and back up. Now we're starting to see some tightness. Can it get going? AMR is another one. I think this is Alpha. Yeah, Alpha Metallurgical. Again, the stock went from 0 to hero. So you're not early, okay? I wouldn't say this is like the start of another 2-year run or anything. But nice consolidation in here. And again, notice how the dips have started to get a little bit more controlled in here. And obviously now it's picking up steam. So anyway, coal's an interesting one. And of course, oil services. This is Schlumberger, or SLB they call themselves now. It's a little bit wild here. I'm recording this, like I said, late Friday morning. They reported earnings this morning. Numbers are good. Sales up, 27. Earnings up 73. I think they beat by, a couple pennies or whatever. Acting, not the most powerful thing, but clearly out to new highs, holding the new highs. Maybe it pulls back some, but looks pretty good. And then CHPX, I believe. This is, nope, I got that symbol wrong. So, well, I'll look that other one up. But Weatherford was another one. I was going to mention a few of these. Obviously extended here to the upside. But these oil service stocks certainly look good. So not even pulling back here. Maybe it can pull back and provide an opportunity. In growth, a lot of the same names. I think we're going to be waiting for earnings season to find new things, whether they're off the bottom that have been building bottoms for a long time, or whether they're things that have been setting up here. AXON, I've been mentioning before. I mean, I just think it looks, this is just kind of a nice 7-week tight structure. There was a convertible offering in here, so maybe there's a little bit more overhead than it appears, but it certainly just looks almost classic in terms of, tight, proper, well-controlled bases, volume kind of in the right places. We'll see what happens going forward, but certainly a nice setup. Shift 4, this one had stretched its legs, and again, you kind of see this sharp, call it $66 to $59 pullback over 2 days. But really hasn't done anything wrong. It's well above the 25-day line. So this was kind of indicative, and not that the airlines are normal, but that sort of thing is indicative of what I saw this week, is stocks that had really stretched higher. Okay, they pulled back, but not really breakdowns, nothing like abnormal to this point. So let's just see how it goes. Shift 4 continues to look good. Impinj, PI, I've mentioned this before. I'm just bringing it up because it did try to break out. Of course, breakouts have been poison, especially with growth stocks. So it's immediately pulled back in. But, just net sort of higher lows, obviously, higher highs over the past few weeks. Looks like it wants to get going if the market can really become growth stock friendly. A couple of chip, I mentioned chip, the SMH earlier. Still watching ASML. This is sort of your fundamental leader for sure in the chip equipment space, kind of a monopoly. I like this big shakeout here a few months ago. Changed character since. Yes, it's had some sloppiness with the Fed in December. You can see this pullback, but held the 50-day line, held the 200-day line, kind of where it should. accelerated to higher highs. Now, of course, again, a little bit of a sharp 2-day pullback, but you look at that chart, you wouldn't say anything's really broken with it at all. So far, so good on that. AEHR, this one's a hot potato, so handle with care. I mean, the stock basically doubled here in just a week and a half, but huge numbers, huge estimates, tame valuation if that's your thing. But starting to settle down. It's only been a few days. This would be one I'd be more tempted if I came in here next week and it was still kind of in this range and the market was tight and quiet. Maybe you get an opportunity, but just highlighting the big strength there. A lot of the cookie cutter names I think are decent risk reward. Here's Five Below. I didn't even see this was up a few bucks this morning, but here's Five Below. Gapped on earning, the weekly chart. It's always had a great story, but it was like the trade war, then it was the pandemic, then it was inflation. It's had one thing after another the last few years. Now maybe finally the underlying growth story is intact. You can see the stock's actually been trending higher here for a few months and outperforming the market. Look at how nice and tight this last little post-earnings consolidation was, relatively speaking. Pretty nice and well contained. I like this higher high here. I like the normal pullback here, 50-day moving average and some support in here. Like I said, probably a decent risk reward. Planet Fitness, PLNT, same sort of thing, not as powerful. There is older overhead here. You can see, let's see here on the weekly chart, there is overhead here, which could be a snafu. I'd probably like to see this one stretch higher, and then kind of play the next pullback sort of thing. But overall, it is acting properly. I don't know if that was real volume. That seems a little bit excessive. But I think price-wise, the stock looks good. Risk reward, 50-day line, whatever, looks pretty good. Dave & Buster's, PLAY, not on my watch list, but again, a nice little setup in here. Gets hit for a couple of days, looks fine. Weekly chart, again, it's one of these stocks that has been going sideways forever. Obviously, got nailed during the pandemic back here, but really going sideways forever and just kind of getting a little bit, I don't want to say tight, but more and more shallow pullbacks here, a little bit of volume kicking in. Let's see if the stock can accelerate higher. A couple more IDs. Uber, some of these off the bottom names look better. Is it out of the woods? No, but big cash flow story coming up here the next couple of years, really. Big earnings reaction here, held above the lows. And now it's just, 1 week. Now this looks like, barring a huge reversal this afternoon, 2 weeks above the 40-week line. Yes, there's overhead, but I'm just kind of looking for a change in character. And again, I mentioned this last week, it just doesn't, even on this sloppy last couple of, I don't want to get too close to the market, but the last couple of sloppy days, it went from 30 to 28 and a half, say, which, for this stock is not that big a deal. And it just seems much more tighter and in control. Usually when you see that, it means there's institutions involved as opposed to just hot money. And that hot money can be hedge funds and stuff, but as opposed to people kind of coming in, coming out, changing their mind overnight, that sort of thing. These are guys like, okay, we're going to build a position or add to our position, and it becomes a little bit more under control is the way I put it. So Uber still looks good. And then a couple of medical names. So we'll see. This is Insulet. On one hand, it did have a little volume this week, and it did kind of break the 50-day line. So it's kind of like, but I do look at the weekly chart. We'll see how it closes. I still just think this looks, it had this huge earnings ramp, almost back to all-time highs, which is pretty damn good. And it's just been straight sideways and very tight and well-controlled in here. Who knows, maybe earnings aren't going to be all that or whatever, but to this point, it's still something I'm keeping an eye on. And another name I like a lot is that's setting up well. This is Inspire Medical. It's down this week, getting a little hit today, but no volume at all. It's a thinner name, so that's number one. Higher price, but thinner. But no real selling volume here. And again, it's had this persistent advance. And to me, it's still pretty, look at the weekly chart here, it's still pretty tight. Yes, you'd want to see it really break out, in my opinion. But to this point, whether it's a risk reward trade or you just wait for it to get going, I do like the overall setup. So long story short, I don't think that much has changed this week. You still need more breakouts. You still need more strength. You still need some follow-on upside activity. But I also don't think the reversal of, let's see, Wednesday and Thursday, because it was a holiday shortened week, I don't think that was really too damaging yet. Now we come in next week and we're down, 5%. I'll change my tune. But so far, a lot of the budding positives, as I would say, are still in place. The broad market, some of the cyclical names, seeing some setups in growth stocks, some of them like Uber off the bottom, some of them near their highs like Inspire Medical. And really it's just a matter of just staying with it day by day, week by week. Don't get in front of the market, but just be ready that, if this is sort of more of a 2 or 3 day shakeout and the market gets going and earnings season goes well, you want to make sure you're ready to take action. If it doesn't happen, hey, that's okay. We'll stay mostly in cash. But if it does happen, you want to be there. Okay, that's all the time I have for today. As always, thanks for listening, and be sure to come by again next week for another Cabot Weekly Review.